Okay. Okay, guys, thank you very much for joining me. Welcome to Money Talks, another episode. This is the second live stream I've done on CINEWORLD, so if you want to watch the first video, go see that. I'm going to try and be a bit more concise on this one, and because apparently I waffle, and I'm waffling already. So let's just jump straight into CINEWORLD Chapter 2. Okay, guys, okay, so basically, this is everything that's come out in the last week. I know there's more information out there. I haven't had time to comb through Reddit yet, but first thing I wanted to show you guys something that I enjoyed, a quote that I saw from Mookie this week, which was, while Cineworld would, of course, have welcomed the liquidity of becoming a meme stock like AMC, we were never so lucky. Obviously, this is all too true to us. This would have been fantastic. This is why I don't get too angry at people going, oh, let's chuck a bunch of money into Cineworld, because like it worked for AMC. To some degree, that sort of American dumb hopefulness does work. So anyone that goes, oh, that's stupid or whatever, it is. It's not like, it's not technically financial sense, but it has worked for Game and AMC. It's not wise investing strategy, but you can't say it doesn't work. It does work. But in this instance, it's nice to not rely on your company becoming a meme in order to gain liquidity. So the question is how is Cineworld's cash supply if it's not going to go meme stock like AMC? And then I'm going to do a couple other points. Can Cineworld survive bankruptcy? And then also I want to talk about what could the outcome of dilution be. And I'm going to spell dilution correctly. And then I'm going to talk about, I want to build some slides on this and talk about it in more depth, but I did some research this week on Hermes Chapter 11 filing. This isn't really a big company in the UK, but if anything, that makes it more relevant. It's an American company. They went bankrupt, and all the shareholders got bought out for a pretty reasonable price. So I want to do more research into that, because that's potentially a possibility here, although I don't see Mookie selling his shares. So the first thing that has happened since last week that I want to touch on is dip financing for Cineworld. So they received £500 million, not £500, with 20% interest. So the question is, how's that going to affect their cash supply, and how is it going to affect them in the long run, and will this be enough, and all sorts of questions like that. So I think the first thing we need to do to answer this is look at their cash supply, the most modern thing that we have on their cash supply at the minute, which is this. So this is from their dip financing request, or their bankruptcy filing. This is their 2022 free cash flow forecast. And what I've done here, just a little bit, just check that you can see at the bottom there, yeah. They've got 350 million minus 4 million, and so what I've done, okay, let me tell you what I've done here. So in August, I saw on a statement somewhere that when Cineworld received its 500 million, all they had left in cash was 4 million. So I've ignored the 136 million here, and instead I put 4 million, put in the worst possible projection that could happen, basically zero. I think that Cineworld made more money towards the end of August and were actually doing better by the time that they got their financing, but that's moot. Let's just put the worst possible estimate in this to work out if Cineworld are going to survive this, what their sort of cash supply is going to be like. So 350 million minus 4 million divided by 8 months will give you the amount of cash burn that they had. People can do all this fancy financial tricks and stuff like that, but really what you want to know is how much money they're losing on average each month, and that's going to give you a best indication of how helpful that 500 million is going to be. So once you've worked out where they were in December minus where they were in August, then and divided that by the number of months, what you get is 46 million per month cash burn, the absolute worst. That's the nice high place they were in December, and the lowest point they were in August. And so basically the 500 million, I estimate that it should last them 11 months. And I don't think they will touch all of this. I'm hoping that they don't need to use all of it. Instead, what they do is pay off interest on loans, and basically it just serves as a way of making sure that they always keep operating, which is obviously what this is there for. So yes, they can survive 11 months by this rough calculation. I think they could possibly last a lot longer than this, but it's just to give a general idea because of all the things that are going to now let's look into what's going to happen over the next 11 months, or more importantly, the next 3 months, and then we can determine what's going to happen to Cineworld's share price, or what significant dilution might be. So what we have here is, these are the two major events, more impactful than any information that has come out of Cineworld's Chapter 11 filing so far, is these two posters. These are what are really, like, the filing for me is noteworthy and very important, but the impact of these two things will actually determine whether Cineworld makes it or breaks it. And so I've pulled together the two most important reasons these are such significant impactful things to Cineworld at this present time. What Cineworld need is an enormous cash injection. They need to be making 46 million more per month than they were before in order to get to a healthy place. And so, to give an idea of how profitable these films are in the grand picture of things, you might think, oh, Avatar isn't a big film to me. Well, it's domestic. This on the left is domestic, and this on the right is worldwide. Avatar in America was 4th largest blockbuster of all time, and that was in 2009. But also really impressively, and I think super interesting, is Black Panther was 6th. And so, and then when you get into the worldwide, Black Panther is 14th, but Avatar is 1st. So this is really significant. So Avatar is definitely going to do better, is expected to do better than Black Panther 2 in both domestic and worldwide. But the reason Black Panther is such a significant film is because of this domestic statistic. Cineworld, a large portion of their business now, since they bought Regal, is America. So I believe the domestic box office mojo here is talking about US sales. And so the fact that Black Panther is such a high lifetime grossing film in America is really significant. And because that will have the biggest impact on Cineworld. And Avatar 2 will do great in America and worldwide. As you can clearly see, it should do better in both. This will be the first time since the pandemic that they've had 2 blockbuster films back to back. They have had a few Marvel films this year, but I don't think they've had anything like these 2 events that we're about to see, cinematic events. And then on top of this, there are other great films coming out in November and December. But then what's also really cool, this massive cash injection could be exactly what they need to pay off all their lenders, and then also simultaneously, while all of this is happening, they're renegotiating with their landlords. So this whole bankruptcy thing could be an incredible strategic move by Cineworld. Now, I do obviously believe that Cineworld will come out of this without being handed over to creditors. I think one of the things that making me so confident is that MOOOON has a 20% stake still in the business. Now, I don't know MOOOON, and people can do all sorts of dodgy stuff in the financial world, but as I understand it, and feel free to correct me in the comments, MOOOON holds 20% stake in Cineworld, and the stake he has are the same ordinary shares that we all have. So if there is significant dilution, it's going to affect him also. So this leads me nicely into the dilution conversation. A lot of you have been asking, what do I think significant dilution is? I think the dilution question is really important. If you understand the dilution thing, you can understand likely outcomes for the share price in the event of different types of dilution. So I've just made some clear markers here, just in case you're not familiar with how dilution works. um, 3 billion revenue divided by 3 billion shares would mean $1 per share. So if you had one share, in that event, you'd get $1. If you then diluted it by 100%, if you had 100% dilution, the 3 billion revenue would now be divided by 6 billion shares, in which case you would get $0.5 per share revenue. Now it's up to the board of directors to decide how to spend that revenue. And if there's free cash flow there and stuff like that, but I'm just trying to give you an idea. If there's 100% dilution, the revenue would be split in half. So Mookie's 20% stake in the event of significant dilution, that is 100%, would drop to 10% equity. And then creditors would own 50% of CINEWORLD. And then also equity holders could, over time, purchase back the stake from the banks. So we would have the opportunity to see our shares grow again in equity. But so now that we understand that, now that we understand how dilution works, what 100% dilution would look like, what would it mean to the, what would it look like if we did have 100% dilution to the share price? Well, so there's a bit more math here. So this is the current market cap of CINEWORLD here. That's $40 million, which is remarkably small. And I'm going to show you why it's remarkably small. So this is the current share price. And so the share price is 3 cents on eToro. I'm not sure. I don't believe eToro have it in pennies. I believe it's in dollars. So I think that's 3 cents converted. And that works out to 1,379,000,000, or I'm going to round it up to 1.4 billion. And so you have 1.4 billion shares in CINEWORLD, and then you had this is for free cash flow. This is 2019 free cash flow. So this is the actual free cash flow from CINEWORLD in 2019 when everything was going well for it. It was having a terrific year. They had 160 million in free cash flow. So this is all I'm gonna simplify this all in a minute, but just bear with me. You have 860 million in free cash flow, 0.86 billion, and then you have 1.4 billion shares. So you had 61 cents per share in 2019. You had 61 cents per share in 2019, and each share currently costs 3p. So now you're going to see what I'm working out here. If I had 61 pence per share and I could buy shares for 3p, technically you'd have to multiply the price of my share is 21%, the free cash flow is 21 times the price. Okay, so the 2022 price is times 21 gives you the 2019 free cash flow. Sorry, that was such a head spin. But basically it means if you invested 10k in CINEWORLD now and there was 0 dilution, well, you would get, we got back to 2019 earnings, you would get £210,000 in free cash flow. So basically, if you invested 10k, the dividend alone would be around £210,000 and you'd be left with equity. However, if the company gets handed over, if the company gets dissolved, if they can't pay off their debtors in the 11 months, if they can't find ways to pay for things, then yes, it gets handed over to the banks and it's 0. The outcome is 0 for the shareholders. And that's why I think a lot of big investment institutions are avoiding CINEWORLD, but also because of the downturn in the market, there's a lot of opportunity for investors. So I think a lot of equity firms have just are tackling different opportunities at the minute, and even retail investors, they're struggling to get as much cash as they were able to in the pandemic. No more stimulus checks that I know of at the minute, but it would be interesting to see what happened if a stimulus check did go out, what would happen to the CINEWORLD share price. But yes, so basically, if you invested 10k in CINEWORLD now, there was no dilution, Well, then it went back to 2019 earnings. You could expect a free cash flow of £210,000, which is a nice profit. And you can imagine the share price would also go up. But uh, I haven't done any more slides. I didn't have enough time to add more. But basically, what I'm expecting to happen is minimum 100% dilution. I mean, if the dilution is less than 100% to the debtors, to the creditors, then we are in for a very, very quick recovery. So if you can see here, if the dilution is 100%, Mookie stake goes to 10%. But if it's 200%, which might be more likely, this might be what significant dilution is, then Mookie stake goes to 5%, and the creditors would own 75% of CINEWORLD. Whoa. So I don't see creditors wanting to own that much of CINEWORLD. I think what they're trying to do, I think creditors quite like this situation that CINEWORLD is in right now. They're just trying to claim more ownership of what will be an incredibly cash-rich business in not too long. Back in 2019, CINEWORLD's debt did not seem crazy at all. It's only after a year of being... it's only after 2 crazy bad years that CINEWORLD's debt started to look like a problem. But CINEWORLD did a lot of very smart things to survive through that time, and it's remarkable that CINEWORLD has done so well. Has managed to survive, given its substantial debt and the events that happened. Like, very few other businesses had to suffer the way that they did. I can't see, if I was trying to destroy CINEWORLD, I don't know how I'd do it, because basically unless I'm completely wrong, and the interest in principal goes up significantly. Looks like CINEWORLD pay a large significant interest in principal every 3 months, so it's like 7, 3, 59, 1, 9, 56. So what you got is August. So you got July, August, September. So they've got this 500 million now. They'll be paying a big chunk of interest in principal, and then in sort of November time, when Black Panther comes out, they will be paying another interest in principal, but they will have significantly more cash. So now I'm just reading the comments to see what you're saying. By the way, guys, that's most of the information in this video. Oh, what I was going to talk about, potentially, I think I'm going to go into this next week, is similar bankruptcy filings of this nature and what that effect had on the company. So there's Hermes, their Chapter 11 filing, and those shareholders actually got bought out in that event, and they were in a far worse situation to CINEWORLD. So I want to compare the financials of Hermes to the financials of CINEWORLD. I also want to say that one of the reasons if you try and get your information from a reputable news source on this issue, they are going to lean on the pessimistic and the cautious. If a stock looks like it's doing well, then actually, there's a psychological reason for this. Why news articles sort of take a particular approach in the events of certain situations. They don't necessarily give you the outcome they think is most likely. They give you the outcome that they think their readers... Let me give you an example. In football, you have a goalkeeper in the middle, and statistically, the goalkeeper, when a goalkeeper's doing penalties, the best place he could possibly stand is in the middle of the goal. Statistically, all players shoot for the middle of the goal most of the time. Between left, right, and middle, the middle is the safest place to stay. However, every time a goalkeeper dives, this is because a goalkeeper is mostly afraid of people seeing him not move. So, for instance, if the goalkeeper just stood still and the ball went to the left or right, then he would look like a complete muppet if he just didn't dive. So they always dive. What I think this is similar to what's happening with CineWorld news articles, is that they all this negative stuff is coming out about CineWorld. If they put a pessimistic article out, even without claiming whether what's actually going to happen, it's safer to sound pessimistic, and then the stock does well. Whereas if they sounded optimistic and it went badly, they looked like idiots. So I think that most news articles, like the Financial Times, just read the information that they put out there. Don't read their speculative stuff. Just try and get the information and the sources from them. It's why I generally prefer places like Reddit and stuff most of the time, because it's very easy to separate what is someone sharing information and what is someone sharing their opinion. Whereas that's, I think, harder to do with conventional media. So I don't have a lot of thoughts on the recent RNS of Cineworld, unfortunately. Their upcoming earnings report, this is probably going to be the least useful earning report. Like I've shown you here, we know their earnings from the last quarter in more detail than we know any company. And so there could be some optimism if August is doing quite well. If the end of August did quite well, it could change things a bit. It could basically, if it looks like Cineworld aren't going to go bankrupt, you can see Cineworld to climb very fast. But I think a lot of investors, the big institutional investors, they're going to want to know what significant dilution means. So unless the whales start investing in Cineworld, it's the share price will not move dramatically. So unless we get, as Mookie said, liquidity from the fact that Cineworld becomes a meme stock. So if you're someone that's holding Cineworld shares and you see people going Cineworld to the moon on Reddit, just fucking join in, all right? But like you're not telling people to buy or sell. People are should be responsible for their own money, but and I think buying Cineworld is not the worst thing in the world you could do with your money right now, but I mean it is extremely risky. Okay, so that has been my thoughts on Cineworld this week, and yeah, if there's any more questions. Sorry, Mersh, that I couldn't answer your RNS question. But I'd be interested in your thoughts, so if you want to post them in the comments, please do. And yeah, I'll be doing this every week, guys. I've really enjoyed making these YouTube videos. I did a video yesterday about how you can become a popular investor on eToro, or essentially how the 3 different ways that you can make passive income on eToro. Some of them are a bit obvious, but I do go into my own insights on them and try and help you with a bit of strategy. And then next week, what I'm going to be working on is sort of, if you're already on eToro and you're already trading, or if you're doing the things from my beginner video, how you can increase your chances of becoming a popular investor on the platform. I am a popular investor on eToro, and I've been trading on there 8 years, and that's how. So I learned a lot on that journey, and I just want to share it with you guys. And it makes me it now makes me, I think I got an email update the other day that's now making me $500 a month on top of how my investing is doing. And that's how I learned, it's just through these 8 years that I've learned how to analyze the earnings of stocks, rather than just jumping on meme bandwagons and trying to track the charts. I've learned that if you follow the earnings, that's actually the best indicator of where a stock is going to go. And so, yeah, I'm trying to build this platform to share my information. If you enjoy that, then please continue to subscribe. But also, if you leave me comments, I am going to react to them. Oh, what I want to tell you, what I was telling you about what videos I'm making. The week after that one, I'm thinking of doing another video on Cineworld, breaking down the impact of different levels of dilution. So 100% dilution, 200% dilution, because I went into it a bit in this video, but there are things like it will also have an impact on how much debt CINEWORLD have. So what I want to show you is the impact CINEWORLD's debt has had on it so far, and then what it would look like for the business if it didn't have that baggage hanging over it. So because obviously you're going to get 50% dilution, but then you're also going to have maybe 50% less debt. So that also has interesting outcomes for CINEWORLD. So this has been my view on CINEWORLD. If you've enjoyed this video, please like and subscribe, and I'll do another one next week. So, by the way, I don't know what's going to happen to CINEWORLD. So yeah, you're investing at your own risk. This is purely educational and my thoughts. And yeah, you're investing at your own risk, but CINEWORLD to the moon.